Hello, hi everyone. Hi, welcome for another video with Stock Lighthouse. Alright, so this is going to be our usual weekly updates on the market and some of the stocks that I'm actually looking at for this on this weekend moving forward for next week. Alright, so I think pretty much you are familiar with the format, so we'll just get into it. Couldn't really come up with a name, but just going to be something lame. I'm just going to call it the Weekend Stock Talk. Alright, so that's the name for now until we come up with something better. Alright, so before we get started, so same thing, if you like this video, been watching it so far, just like and subscribe to our YouTube channel so that you'll be updated. Click on the bell button beside it to be updated for the upcoming videos. For now, there's actually two parts of this channel. One is the Stock Lighthouse Academy, where I'll be sharing about some of the lessons and knowledge I have regarding investing for beginners investors to achieve to understand and read up more, okay, to find out more about investing itself. Then there's where we have this second part on a weekly basis on the weekend. That's where we actually do a quick review and quick update of the stock market, and then to see as well are there any good opportunity to look out for the following week. Alright, okay, so same thing before we get into the disclaimer, whatever I share here is based on my experience. I have no control of the market. I do not have the crystal ball whether the market will go up or go down. It's just based on whatever I see. I think that is a good opportunity, potential trade that could be taken into consideration. May or may not, I personally will enter. Alright, so it really depends for that. But I just want to share some good opportunity with you guys so that you can take a look. If you made a trade, make some money, I'm happy for you. But same thing, disclaimer is please do your own due diligence. Alright, okay. So let's have a quick look of where the S&P 500 is. Right, this is the S&P 500, the US market on the fire view, which is every candle is on a weekly basis. You can see that the S&P 500 has actually gone up, alright, over the last few years. Only particularly last year, alright, there's a huge, because since start of 2018, alright, when Trump started to have a trade war with China, price get a bit choppy. Then in September, there's a huge market correction within the last quarter. Alright, and within this first quarter of the year, we have really bounced back up to where we are previously. Alright, so if you look at this on a daily basis, a daily chart, alright, you can see that we are back to where the all-time high is as of now. In fact, we actually just slightly broke the all-time high figure just over the last few days. Alright, so the whole market S&P is back to where the high is. So the market is just generally cautious where it's moving ahead, but no doubt we can know that it's after the correction things is getting bullish. Where the market will be heading is still pretty uncertain, because although based on chart and based on price action alone it has been coming up, but in terms of economy, market sentiment, there are still a lot of fear, there's still a lot of uncertainties. Although earnings might be coming up, but a lot of earnings release are followed up with pretty bearish forecast. That's where a lot of stocks and companies have been actually suffering a dip here and there. Alright, so the market generally is still pretty uncertain where it is heading. There's no clear sign that it is either a bullish market or bearish market. So we just to be extra cautious. But on a short-term basis, now it still seems to be on a slightly bullish momentum for now. Alright, so we will just have to see and observe how we go. Just bear in mind we are at the all-time highs of the US market. Alright, okay, so for this week, what are some of the companies that we can look at, especially after what happened on earlier of this week alone? Alright, for this video, I'll be going through three companies. So these are the three companies we're going to look at. Alphabet, which is actually Google, alright, Arista Network, ANET, and FFIV Network. These are the three companies I'm going to look at. Alright, the first one will be Google. I think Google, you don't need any further introduction. Everybody knows about Google. It's a search engine. It is also the parent company of YouTube, right? They own YouTube, so they are the two largest search engine in the world as of now. Alright, so they've been making good money. They are using advertisements. They are also using paid ads to actually earn their revenue. If you're looking at Google itself, firstly, I'd like to look at the revenue. Right, you can see that the revenue for Google is generally increasing over the past 10 years. Alright, okay, in terms of net income, right, okay, they are healthily growing every year, except for last year there's a slight dip, but overall they pick up over again, so that's pretty healthy. Then that will actually make up a good earnings to EPS, the earning per share ratio as well. So that's what I like about Google. And of course, in terms of the operating cash flow, you can see that Google has been making plenty of operating cash flow. Their capex expanding on their companies are not generally very high, so that leaves them quite a healthy level of free cash flow as well, right? And if you look at in terms of return on equity, I mean it's a healthy around 15% and higher. That's something uncomfortable, except for last year there's a slight dip, right? And in terms of the health ratio, Google has been very conservative in terms of their current ratio. That means that they have plenty of liquid assets that can net off their current liability as of any year. But of key thing is also Google has very low debt ratio. So it's a company that is really getting into any form of market financial crisis. They will not. I'm not so worried that they actually will be brought down by in terms of debt itself. Alright. So Google is definitely one very strong company, no doubt. So what happened is just few days ago, Google just had the earnings announcement, and that is where the price dropped down. It's because the company has a weaker forecast going ahead. I think it's a ridiculous drop itself because in terms of earnings per share, they are still making money, still earning pretty healthy money, and they beat most of the estimates. The only thing is the forecast itself is big. That's why investors are getting worried and they start to dump their share. There's a gap down in terms of the pricing itself. Right? If you look at the trend of Google, but it has been on a healthy uptrend, okay, all along. Okay, likewise, same thing until, same thing until late. It's on the uptrend until late 2018, around this range. The market start to correct itself, and you got a stronger dips towards the last quarter of last year. Alright. So as of the start of the year, it has been going up on a very strong bull run, right? Until the recent earnings have a dip, right? So if what I were to say, okay, if I look at it, alright, to be conservative, alright, it seems like this is one of the major support level, right, that Google have, right? And right now they just bounce off the previous low. Right now they just bounced off a previous low, okay, which was previously tested pretty closely around a few times. So as of Friday, when the market closed, it actually bounced up again, right? So this actually gives me a pretty good sign that this is actually still a very strong support, short-term support level, and this will actually be a good potential trade to enter to look at. All right. So if we look at the figures itself, currently Google PE is at 27.12. Right, it's nothing surprisingly. It seems way overvalued, but it's not surprisingly because for any tech companies, Google is a tech company, right? For a tech company to have this kind of PE is pretty normal. Okay, so with that, actually I reference it to the PEG, the PE to growth ratio. All right, so the growth of Google is pretty healthy, but based on the current PE, it's still quite fairly overvalued as of now. So we are looking at PE preferably about 1 or lower. Alright, so okay, as you can see, Google actually has a very healthy cash flow. So the other method, I look at it as a growth company, I will actually look at discounted cash flow model to look out for Google. Alright, so based on this model, my calculation, alright, if I'm not wrong, based on my calculation, the intrinsic value could be worked out roughly about 1,373.29. Alright, and Google currently share price is about 118.50. That gives you a good healthy margin of safety about 15.8%. Alright, so if you are value investors, right, this could probably be a good entry point for you to add a bit of your portfolio, add a bit of Google share into your portfolio. Alright, do take note that it is not exactly on a very low. Okay, you can see as a long-term chart, it is still pretty high up, but we know that as Google as a company, as it trends upwards, it could get more and more expensive, right? But based on the cash flow itself, it seems like Google is just slightly under order value, right? So it's good to add a bit of a position in your portfolio, but do take note this is actually a pretty expensive stock itself, right? One share is $1,000 over, so unless your portfolio is generally very big, you can actually add a portion to it. Alright, that's one of the way. Okay, if not, the other options, the other way you can actually go around benefiting from Google itself. Actually, you can look at it is actually do options on it, right? So I'm just going to assume that the people who are watching on this video are beginner investors, right? Your funds are generally small, roughly between 10 to 20,000 US dollar, right? So that will be a good amount for you to kickstart, right? To risk a bit, you could probably get into what we think you can use this strategy called the bull push spread. Okay, looking at the strike price between 1160 and 1155. Okay, 1 month expiry to next month June. All right. Based on current off-market pricing, okay, that will probably fetch you about 155 premium for the month, and you're going to risk about $345 for this trade if it goes wrong. All right, so that will actually net you roughly about 44.9 ROI. All right, so if this works for you, all right, Google is probably one good entry to look at. If your portfolio big enough, I definitely recommend you to get some of the stocks. It's a good company to hold on. You know, if you have, just imagine if your new Google was going to be $1,000 stocks years back, you know, when it's still in the hundreds, I mean, you'll be making a lot of money. All right, so this could probably just fetch a good opportunity to look at it. All right, okay. So the next company we'll be looking at is Arista Network. Right, this is actually a network company that I have been looking and following for quite a while. They are very strong. They are basically actually a computer networking company that actually links all the routers and databases and data centers, cloud computing around the world. All right, and one of their big key competitors is actually Cisco. All right, and looking at this company itself, their financials or rather their numbers are super strong. All right, what I like about it, you can take a look, is in terms of their revenue. All right, you can see the numbers has increasing over the years. All right, net income as well has been increasing over the year, except for last year there's a slight dip. All right, okay, earning per share is still pretty healthy, it's increasing over the years. Okay, likewise for cash flow, no issue, high healthy cash flow, low capex spending that actually allowed them to have a pretty healthy free cash flow as well. All right, return of equity pretty healthy, still most of them every year are consistent above 15%. All right, financial health wise, current ratio is still same thing, healthy, above 1. That means they have more than enough liquid asset to offset any current liability if they actually fall into any financial crisis within a single year. All right, in terms of debt wise, very healthy. All right, very low. All right, so that is also one of the good companies to look at. They are generally very strong. Okay, so they have a pretty similar situation as Google itself. Right, it has been an uptrending stock, okay, for years. Okay, until last year where the trade wars come, things get a bit uncertain, so stock was trading sideways. Then toward the last quarter, everybody is selling off. This company is affected as well. Alright, when it hit the bottom of the year, it started bouncing up all the way up. Alright, it has broke its all-time high and went all the way up. So just few days ago, it just released its earning announcement. Okay, likewise, okay, the company is doing well, beating all the estimates, making all the money. The only thing is, the company have a weaker forecast for the next quarter. Okay, looking at how all the uncertainty with the economies and stuff, so the company has a weaker forecast. All right, so when the market opened, all right, the share price actually started at about 260, a strong gap down. Okay, it reaches down 250, it then quickly recover back up all the way until 278 to show that there's a very strong buying sign as of this level. Alright, so if you look at it from a technical perspective, you will realize that previously when there's strong earning announcement, price gap up. Alright, and you will see that actually the price has been retesting these new support levels again. Right, has been shoot up. Right, so I think this is a good company to look at. If your portfolios allow, you might add in here. Alright, but I will be a bit it depends on your perspective how you look at it. Alright, I will share a bit more with you following to come. Alright, but what I would actually prefer it to be is because it has bounced back up so much higher by now. I missed that chance where it actually was here when the market opened. Right now it's where the market closed. Right, hopefully it will come back down a bit to retest it before it goes up again. Right, that will actually present another good opportunity. But It may or may not happen. It could probably just go all the way up and never come down. Who knows? Alright. So the key thing for ANET is this. ANET current PE is superly high. Alright, it's 67.62. If you reference it to the PEG, it's still very high. It's about 3.65. It's way overvalued. Alright. So for these stocks, if you look at it, the numbers are pretty healthy. Revenues are okay. But if I look at the cash flow itself, you will see that it's growing, but it doesn't seem to be a bit consistent. This high and came low, then high and low, so it's not that's consistent as well. So that's why in this I look at the earnings per share are still generally consistently going up except for last year. So I kind of like okay, as a growth company, probably I will use this valuation method, discounted earning model to evaluate. So with that, based on this model, my calculation is I get it roughly about 69.45 intrinsic value. Right, so as of current price, the share price is 278.41, so it's way overvalued. So as a value investor, you definitely will not want to actually get in to buy in, and that is why I mentioned earlier. So if over here, I might not be so keen of buying into it. Alright, but if you are a technical trader, from a technical point of view, this might be a good support level. Alright, so if you don't want to miss a chance to enter some form of trade over here, likewise, same thing, you can actually use this options. You could actually look at using a push spread to minimize your risk. Just do a small trade, looking at strike price 260 to 250. Alright, it's a wider spread. This is something you need to take note. So using the same 1 month option, you will probably fetch about 235 premium, but you will be risking 765 for this trade alone. Alright, that will actually take up about 30.7% of your ROI. Right, but although the ROI looks quite okay, still quite healthy, just take note that this is a larger trade, so your risk level is about 765 if this trade goes wrong in a month, right? So if your portfolio is not really that big, yeah, right, you might want to just skip this. If it's come down, if I have an opportunity of premium, alright, at a 250 strike price, 250, 240 strike price, I might even consider that as a better option because I give myself a lot more margin of safety. Alright, okay. So the last company we're going to look at is actually this F5 Network. Alright, so F5 Network actually is one of the US company. They are actually one of the pioneers in doing load balancing of network. Right, but over the years they've been doing so well, but because market gets saturated, they start branching out, doing a lot of other server provider services, cloud data services and things like that. So they are still pretty good company, venturing into application firewall as well. So they are actually generating pretty good returns and income. Very strong company. And what I like best, same thing, is their numbers. Their revenue healthily increasing year to year. Net income, same thing, increasing healthy year to year, right? Okay, looking at the EPS, wow, fantastic, increasing year to year until about $7 per share now. Alright, operating cash flow, definitely no need to say the same thing. Alright, if they are increasing, low capex, alright, so that allows them to have very healthy free cash flow. Alright, okay, return on equity, is very healthy. Alright, you look at it, it's above 15, recently just increasing all the way up to about 30, 34, 36. Right, that's a very good sign. Okay, current ratio above 1, that is good, and the best is they have no debts. Right, for IT company to have no debts, alright, that is very, very conservative, right, which is actually a good sign. Right, so which is the same thing. I think this company is financially, they are very strong. Why they are actually bring up this stock itself is because this stock, for the past year or so, I mean, they have been on a long uptrend, okay, until the last quarter it just got, I mean, the market just do itself, it got corrected. Okay, but one good thing I noticed is, right, alright, this stock currently is over here retesting its very strong support level. Alright, and the thing is, because of the correction itself, right, it seems to be moving downtrend. Alright, so as it moves downtrend, can you see that there's this little triangle over here? Okay, so for those of you who are a bit more into technical analysis, you know that this triangle is one of the technical sign that it says that once it bounce off here, it gets up to the resistance level, most likely it will break and continue uptrend again. Alright, of course nothing is certain, right? It may just come here, bounce off and come down and break down again. I mean, no one really knows how actually a technical chart will actually move. That's a possibility, but based on theory, it seems like this pattern most of the time it actually bounce off the support, break the resistance and go back up again. So it seems like this is going to continue the bull run for this stock. So if you interested into it, you probably actually can look at entering into a trade. Alright, so how can you enter that? Alright, for this company, alright, the same thing. Alright, for PE is about 18.63, PEG about 4.87. Obviously they are way overvalued. Okay, if I'm using the discounted cash flow model, the intrinsic value roughly work out to be 136.73. Alright, current share price 154.37, so the company is still overvalued, so definitely not worth buying. Alright, it's not even a fair value for buying if you're a value investor. Alright, so this is going to be a technical trade as well. Just like the ANET, a technical trade, if you want, you can actually enter using a small portfolio, enter a trade, option trade right below this support level. Alright, that's where you can actually enter a bull put spread, looking at the strike price 150, 145 expiring in June, where that will actually fetch you a premium of about 132 and putting you on trade risk of 368. That will roughly work out to give you about 35.8% ROI. Alright, okay, the only thing is I brought up this trade. I like the setup in terms of option setup, but I might not really want to get on it. One of the key things is because the liquidity of the option is super low. Alright, it's below 20 open interest, is super low. It's not worth taking it, but of course if you are someone who are watching this video and your portfolio is huge and this trade itself is going to take you like less than 0.001% of your portfolio size and you don't mind to have it illiquid, if go against you, you're just going to let it run and expire worthless, by all means go ahead and do it. But if your portfolio is small but it's still going to take up a substantial percentage of your portfolio, I highly recommend that you skip this trade altogether. Alright, because if things goes wrong, you want to get it out, it's going to be hard because the liquidity is super low. Alright, so just don't set yourself up to be trapped into something that you're going to be stuck there. Alright, okay, so these are the 3 stocks that I covered for this video. Alright, I hope they are useful. I hope you learned something. Alright, if you like what I do, please comment. Alright, comment on the video link below, be it on the YouTube channel or is it on the Facebook page. Please comment them below. Let me know how you find the video. Also give a comment and feedback. I know some of you have valuable knowledge of these companies you might want to add on to what I have shared, so that the rest of us actually can learn together. Alright, okay, so last but not least, if you are watching this video and have not liked and subscribed to my channel, please do so. Right, it's on YouTube, just search for Stocks Lighthouse. Right, click on the subscribe button and click on the bell below to be notified for the future video. Right, so this is our Facebook page. Just like our page as well. Alright, so that you keep yourself in the loop. As the community gets bigger, people will share more ideas and information, and I believe you will benefit end of the day. Alright, okay, so thank you for watching. Alright, okay, for this week video. Alright, trade safely, have a good trade, and most importantly, have a great weekend. See ya.